In this video, Jim Cramer discusses the upcoming busy week for the stock market with several tech titans such as Apple, Amazon, Microsoft, and Google reporting their earnings. He also mentions the non-farm payroll report that's due this Friday and its impact on the Fed Reserve's interest rate decisions. Jim also highlights specific companies such as McDonald's and its ongoing E. coli situation. He also expects strong performances from Royal Caribbean, Reddit, PayPal, AMD, and Chipotle. He also shares his thoughts on certain stocks such as Caterpillar and its recent performance.
Caribbean is the number one. I'll predict a large beat and raise when they report on Tuesday. They keep doing that. By the way, I also think that both Reddit and PayPal will do terrifically. All three are hot stocks. I bet all three will remain that way. After the close, the playoff attitude shrouds the reports. It's tense. You need to be ready for the ecstasy of a clean beat. Or, I'll tell you, it might be the agony of a forecast cut. We're starting to see a few of those this week. First, we have from Alphabet. Now, the stock's been all over the map, but rarely in a good way. Now, we've trimmed our position in what you know is Google for the Charitable Trust because it's hard to trust. Too often, Alphabet fails to impress. I think it's a great company, okay, but it's not a great stock because management often seems indifferent to the things that investors and analysts want to hear. They really need to talk also about breaking out Waymo somehow. They've lost a ton of money, and they don't have enough cars. Not enough cars on the road. And that has to change in order for them to show that they are not niche, which is pretty much how Elon Musk described them in his Tesla conference call. Hey, you want some controversy? Just say you like AMD, as we do for the Charitable Trust. We know that AI is big, big, big. Big enough for the more than just one chip maker. AMD won't catch NVIDIA, but it will do enough to take chunks of the business. Plus, it has tremendous PC exposure right into the teeth of a big PC refresh cycle. We're buying more AMD into any weakness for the trust because this is a long-term terrific story. Chipotle reports, too. Without Brian Niccol, who's moved in to try to fix Starbucks, I think Chipotle will be fine. I don't know if it can break out from the 50s. The stock feels trapped, doesn't it? But the announcement of a permanent CEO could work some wonders here. Now, Wednesday morning, Eli Lilly, one of our best picks for the Charitable Trust, okay? And that's had quite a run thanks to the GLP-1 weight loss drugs. This morning, Stifel, brokerage house, put out a note that talks about the impact of these drugs on the food stocks. Unlike pretty much everyone else, all the analysts and the people in the food industry, these guys say it's going to impact the food companies negatively. Well, that means it's going to impact Lilly positively. When we walked around the floating platform in the Gulf of Mexico yesterday, I peeked at all the nameplates on every machine I saw. And the predominant one, it was Caterpillar, which makes solar turbines, we call them turbines, that would power a great deal of activity on the platform. Chevron CEO Mike Wirth reminded me that Jim Umpleby, the CEO of Caterpillar, actually came from that division. Cat reports in the morning, I think it could be very, very strong. I just don't know if it'll be strong enough to move what has been an incredibly hot stock. If you take a look at that run-up, I wouldn't be surprised if it actually gave up some of that. It's up 30% for the year. After the close, we got two stalwarts of the Mag 7. We got Meta Platforms and Microsoft. Meta reported a stellar quarter last time. I think they can do it again because the whole ad market seems to be going their way. But Microsoft, let's talk about how Copilot may not be as strong as we thought. Somehow they have to put that story to rest, or it's going to dog the stock until they come up with a new narrative. Here's one that makes a big splash every time. It's called Booking Holdings. Yes, the old Priceline. It's been ages since this company didn't have a smashing quarter. Then everybody speculates about whether the consumer is still traveling. At the exact same time, DoorDash reports, again, I think it'll be very strong and should shed some more light on the consumer. Then all sorts of traders will start to extrapolate from the results to the Fed's next move. Time-honored dog bites man stuff. Don't let it get to you. Thursday can top Wednesday because that's when Apple and Amazon report. Now, we've heard lots of negative chatter about the iPhone 16 to launch. I think that the chatter's right. I think people will rush to sell. I say hold on. We've seen this movie before. Apple's had suboptimal launches before, and the best strategy has been to own it, don't trade it. I bet it'll be right again. Now, I want you to gird yourself for a weak number. Everyone's expecting a weak number. When you get a weak number, guess what? The stock goes down, and then you have to buy. Be ready to do so. Amazon's hard. People truly disliked the last quarter, and the stock was hammered mercilessly because the company somehow got linked with echoes of a weak consumer. I don't buy it. I think Amazon's doing very well. Of course, a few weeks later, from when they reported that so-called bad quarter, The stock was right back to where it was trading before it reported the quarter, and then it went higher still. If you don't own any, again, I don't want you to buy it ahead. You buy it after. We get two drug stocks on Thursday, too. We got Merck and Bristol Myers. This group has been castigated as the wrong place to be when the Fed cutting rates. The hedge fund playbook says that. I think both stocks, though, are too low. But I also know that if you get a weak employment number on Friday, Merck and Bristol Myers will be two stocks that you should not have bought. So put that in a little retrospect. Speaking of employment, on the first Friday of the month, we get the non-farm payroll report. I can't stress how important this number is. We have an upcoming Fed meeting, and we're now seeing cyclicals really miss their numbers because of higher interest rates. A lot of them are rolling over. But if employment stays as strong as it's been, then we're going to hear that there will be no November rate cut. We'll also accept the fact that the 10-year yield is going to be at 4.5 by then after floating at 4.2. I'm trying to notice there's this theme here. I'm trying to steal you because I know there are people who want to sell. But this is a Fed rate cut cycle you want to buy. I told you this week was going to have a playoff atmosphere where you can see the stakes are incredibly high. Finally, we hear from the biggest oil companies, Chevron and Exxon. We just got back from a Chevron platform in the Gulf of Mexico. I got to be impressed, by the way. Chevron's been able to return a huge amount of capital in dividends and buybacks. Yet, you know what? It's still the laggard. It's the worst performer in the group. If not for that battle over Exxon with Exxon for the Hess acquisition, I think the stock would be quite a bit higher because of its great conventional flow. Exxon doesn't have the earnings power that Chevron has, but it's got a lot more love right now. I think people should switch their allegiance and like Chevron. There's Mike Wirth, knows what he's doing. Bottom line, huge week, huge opportunity. Just please remember the first move's been wrong, I'd say probably maybe almost a half the time since this earnings season began. Wait to process the numbers. Listen to the conference call before you pull the trigger. And if you don't want to do the homework yourself, well, guess what? The CNBC Investing Club's happy to do the heavy lifting for you.